The world is in flux. Geopolitical uncertainty is the new normal. Sovereign wealth funds face a complex landscape. They must rethink traditional investment strategies. This essay explores the impact of geopolitical instability. It introduces cutting-edge tools and strategies for navigating this complex landscape.
The Helios Risk Model, developed by a team of geopolitical strategists, data scientists, and financial engineers, represents a paradigm shift in geopolitical risk assessment. Unlike traditional models that rely heavily on historical data and linear projections, Helios incorporates real-time data feeds, machine learning algorithms, and a deep understanding of geopolitical dynamics. Helios goes beyond simply identifying potential geopolitical risks. It quantifies their potential impact on specific asset classes and portfolios. This allows sovereign wealth fund managers to move beyond gut feelings and anecdotal evidence to make data-driven decisions. They can stress test their portfolios against a wide range of geopolitical scenarios. Imagine a sovereign wealth fund with significant exposure to emerging markets. Using Helios, they could simulate the impact of a trade war between major economies on their portfolio. The model would factor in variables like trade flows, currency fluctuations, and political instability indices to provide a comprehensive assessment of potential losses or gains. This granular level of analysis is crucial in today's interconnected world. A seemingly isolated event in one corner of the globe can have ripple effects across financial markets. The Helios Risk Model provides sovereign wealth fund managers with the foresight to anticipate these cascading risks and adjust their portfolios accordingly.
Quantum computing is transforming finance. Quantum portfolio optimization leverages immense computational power to tackle complex problems. It enhances diversification, minimizes downside risk, and maximizes risk-adjusted returns. Quantum computing augments human expertise, enabling better decision-making.
The key lies in building robust frameworks that can withstand shocks and adapt to rapidly changing circumstances. Black Swan events, by their very nature, are difficult to predict. These experts underscore the importance of humility in the face of uncertainty. And, of course, adaptive risk management. Adopting a flexible and adaptive approach to risk management, recognizing that Black Swan events defy prediction and require swift, decisive action. Stress testing is also crucial, rigorously testing portfolios against these scenarios to assess their resilience and identify potential vulnerabilities. Their insights emphasize the need for scenario planning, developing a range of plausible scenarios, including those that challenge conventional wisdom, to anticipate potential Black Swan events. Former central bank governors, seasoned geopolitical strategists, and leading economists offer invaluable perspectives on managing extreme, low-probability, high-impact events. To gain deeper insights into navigating these uncharted waters, we turn to the wisdom of those who have weathered past storms. From the global financial crisis of 2008 to the COVID-19 pandemic, these events have exposed the limitations of traditional risk management frameworks. Black Swan events, those highly improbable events with potentially catastrophic consequences, have become a defining feature of the 21st century.
The 2017 Venezuelan crisis, triggered by a collapse in oil prices, political instability, and hyperinflation, provides a stark example of geopolitical risk in action. For sovereign wealth funds with exposure to Venezuelan assets, the crisis resulted in significant losses. Using the Helios Risk Model and quantum portfolio optimization, we can simulate a hypothetical scenario in which a sovereign wealth fund, forewarned of the escalating risks in Venezuela, takes proactive steps to mitigate potential losses. By analyzing a wide range of factors, including political instability indices, economic indicators, and social unrest data, Helios would have flagged Venezuela as a high-risk investment destination in the lead-up to the crisis. Armed with this information, the sovereign wealth fund could have employed quantum portfolio optimization to adjust its asset allocation. It could have reduced its exposure to Venezuelan bonds and equities while exploring alternative investment opportunities in more stable regions. This simulated response highlights the potential of these advanced tools to not only mitigate losses, but also identify alternative investment opportunities in the face of geopolitical uncertainty. By acting decisively, sovereign wealth funds can turn potential threats into strategic advantages.
Integrating geopolitical alpha, the excess return generated by incorporating geopolitical insights into investment decisions, requires a fundamental shift in mindset and organizational structure. It's not simply about adding another layer of analysis. It's about embedding geopolitical intelligence into the very DNA of sovereign wealth fund management. This transformation involves several key steps: building a geopolitical intelligence capability, establishing a dedicated team of geopolitical analysts, data scientists, and financial engineers to provide ongoing monitoring, analysis, and risk assessments. Adopting advanced analytics is also essential, integrating tools like the Helios Risk Model and quantum portfolio optimization into the investment process to enhance decision-making and risk management. And fostering a culture of adaptability, encouraging a proactive and agile approach to portfolio management, recognizing that geopolitical risks are fluid and require constant monitoring and adjustment. This integration process is not without its challenges. It requires significant investment in technology, expertise, and organizational change. However, the potential rewards in terms of enhanced portfolio resilience, superior risk-adjusted returns, and the long-term preservation of national wealth far outweigh the costs.
The geopolitical landscape is undergoing a profound transformation, creating unprecedented challenges and opportunities for sovereign wealth funds. The traditional approach to investment management based on historical data and linear projections is no longer sufficient. To thrive in this new era, sovereign wealth funds must embrace a more sophisticated and dynamic approach. By harnessing the power of advanced analytics, incorporating geopolitical intelligence, and building a culture of adaptability, they can navigate the complexities of the 21st century and safeguard national wealth for generations to come. The journey begins with recognizing that geopolitical risk is not merely a theoretical concept, but a tangible force shaping the global investment landscape. By embracing innovation, building robust risk management frameworks, and leveraging the wisdom of experts, sovereign wealth funds can emerge as beacons of stability and prosperity in an increasingly uncertain world. The future belongs to those who can anticipate and adapt to the geopolitical storms on the horizon.